Welcome back, guys. So I just thought I'd do a video on pound CAD. This is a live trade that I took. You can see the time down there ticking away. Now I've had to speed this video up for about 3 times the actual speed because it was actually 38 minutes long, which is a bit much. But anyway, while we're obviously in this video already running, just talk about the trade itself. So from the high time frame perspective, we could clearly see that the market structure was pushing to the upside. We were making higher highs and higher lows. And at the time, I recognize a lot of sell pressure, which you can identify here from the center of the screen, where you'll see the red line and price breaking above this structure and breaking back below it. This is indicating a sell pressure, hence the reason why we have this market structure continuing to push down, making lower lows and lower highs. At this point, I've marked a level in the market where I can see prices reacting to the most, and this is a significant level where I want to take the trade. For that reason, I've set the sell stop, and as you can clearly see, we've now been triggered into the trade. Now, how I placed my stop loss was just to simply wait for the previous candle to close to place my stop loss above that as the structure high. When taking this trade, what I'm thinking about is that if price is going to continue to go down with momentum off of the back of the sell pressure that was evident on the hourly candle close, then technically this market should continue to go down. So I'm pretty happy where my stop loss is. It doesn't need to be above the major structure high. It needs to just be above the structure and the chart time frame that I'm trading on, which you can clearly see at this moment in time is a 5-minute time frame. So the stop loss is above the previous wick. The entry is a sell stop entry, and that's my favorite way to enter the markets with limit orders, whether it be sell stops, sell limits, buy stops, whatever it be. Reason for this is because what I want to make sure is happening is that I'm entering trades when the momentum shift kicks in. Now, the aim of this game is to get price action to 1-to-1 as soon as possible so that I can shut this stop loss down to break even. At this moment in time, that's not something that I plan to do. I can see an area at the low of these candles, as you can clearly see with the wick rejections at the bottom, is an area where price may find traffic. If price is not going to be able to break that level for whatever reason, and I haven't hit that target of 1-to-1, then I would more than likely either trail my stop loss into half, taking off 50% of the risk. So if I was planning to risk 2%, I'm now only risking 1% by moving my stop loss to half. Or if price manages to push deep into the level that I've just drawn, as you can see here, the red line, then I will go to break even. We've gone to break even anyway. We've moved at least 1-to-1 of our stop loss range, and that's how I'm planning to manage this trade. Now, as traders, what you guys got to really learn to accept is that losses are part of trading. Winnings are obviously a big part of trading, and that's why we stay in the game, or that's how we make our money, whatever it may be, to support our life, our finances, whatever it is. But obviously, we need to also consider that break-evens are also our best asset when managing trades, making sure that we capitalize on the wins, making sure that we don't lose too much on our journey forward when we're taking our trades in the long run. Now, as you can clearly see, I've put a level in this market where price may come back to retest. Now, what we call in the Forex market is two things in terms of movement, or we can say in the Forex market, there's two movements that happen. We call it either a push phase or an exhaustion phase. And how you'd understand a push phase is the market continues to push in the direction of a trend. So if the market was up, it will continue to push up. And if the market is down, it will continue to push down. That's a push phase. Now, in any push phase, we also have what we call an exhaustion phase. So the market's going to need to pull back at one point or another. And you guys may know it as collecting orders, hunting stop losses. The banks are coming back to add more orders to their trade. You know, so many theories out there. But the point is, there's two flows, push phase and exhaustion phase. And right now we're in a push phase. So if I'm to stay in this trade, I expect the price to pull back at some point or another, either to retest the level that I have, and that level there is a psychological level. It's not a support or resistance level. It's just me anticipating price pulling back to 50%. If it doesn't, then I just want the market to continue to go down. And as you can clearly see, we've just broken the previous structural low. And to me, that's a very good sign that price can continue to push down. Now, what we're seeing is that this level does get respected for a minute or two. and then all of a sudden price starts to pump to the upside. Now, this is something you guys also have to bear in mind when trading, is that what you expect to happen may not always happen. And for that reason, you have to learn to remove emotions. If you don't, what you're going to find is going to happen is that you're going to become too emotionally attached to your trading that eventually it's going to lead you to revenge trading, chasing losses, increasing your lot sizes, and whatever else. If you start to do that, then I'm telling you now, it's a total loser's game, and you are not going to find yourself being successful as a trader, period. So as I said, this level was respected, and I did expect the market to continue to push down. And as you can clearly see, the movement from where price is now to where price my actual take profit was not far off. Usually around that stage, I'm looking to take about 8% off of the trade, because if I know I'm that close, a pip or two away, then technically if I'm risking £1,000 to gain £3,000 and price is only a pip or two away from my take profit, then technically I have to be thinking along the lines of, do I really want to give back around £2,800 or £2,700 to then gain an extra £200 or £300 extra when I'm that close to take profit? Something you guys need to think about as well. But anyway, as I said, after a push phase, we have an exhaustion phase, and that's what you're going to see happen here. Price starts to exhaust. Now, I'm watching this trade as it's playing out. So in my head, a lot is going through my head in terms of where price can go. Should I have closed it at 80%? You know, what should I do now? If price is starting to reverse, am I going to lose this money? These are all thoughts that you're going to go through, and you need to learn to really hone them in. How you're going to be able to do this, guys, is by making sure that you trust the process. How do you trust the process? You need to make sure that you're back testing. You need to make sure that the strategy you're using is foolproof. Foolproof is incorrect. Making sure that the strategy you're using has a high probability win rate, and you have a very good risk management plan in place. Because if you do not have enough faith in the strategy that you're using, the confidence that you're going to come into the market with is going to be extremely low, and it's going to affect you extremely high. Psychologically, you're going to be battling with your demons every single day, and you're not going to be able to flourish as a trader and really show how good you can actually be. So anyway, as I mentioned previously, price is in a push phase. We expect an exhaustion phase to happen. This is what you guys will call a pullback or an exhaustion or whatever it may be, and that's what's happened. Price action at the moment is now indicating that it's stalling, which could possibly mean that this is the end phase to the exhaustion phase, and we could have the continuation to the downside. Remember, management wise, my trade is at break even. There's nothing right now that I'm thinking about other than the fact that while price was down at the bottom, could have taken profits, or now I take a break even, and it's as simple as that. So we'll continue to watch it. But as I was saying, you guys need to build that faith and confidence in your actual strategy. And the way you're going to go about doing this is by back testing. Whether you back test this in a live market, whether you back test this on TradingView using the replay mode, whether you use this on software, FOREX, whatever it may be, or whatever's out there, you need to do it on a daily basis. One thing that really has helped me as a trader to continue to have faith and confidence in my abilities and my actual strategy is by every single evening going back to my charts, looking at the 10 pairs or 5 pairs or however many pairs that I put on my watch list for that day, and looking at where there was possible trading opportunities, the trades that I could have taken being realistic, whether they would have won, whether it would have been a break-even trade, whether it would have been a loss. Putting down in my notebook little hints and tips that I take away from those trades that I could have taken or have missed or have taken, and taking it into the next day. It keeps me focused, it keeps me level-headed, and it really helps me to just stay afloat of all the psychological and emotional barriers that many traders face. So I recommend that you do this. Use a spreadsheet. I don't know, write in a notebook, put it on your phone, take screenshots, log them, whatever it is you're doing, make sure that you're doing it, because I'm telling you now, too many traders come into the market expected to take a trade a day, 2 trades a day, 1 trade a week, however many trades they want to take, and expect that they're going to become successful doing this. This is your business. People go to university, they go to college, they study a degree for a very long period of time, invest X amount of money to get to where they're getting to, and yes, at the end they get rewarded. Trading is exactly like that, and if you want my opinion, I personally believe trading is a degree in itself, in its own league. I don't think that anybody, whether you're a doctor, policeman, physician, surgeon, whatever, could come into the Forex market and take the skills that you've taken or you've gotten with those degrees and apply it to the markets. There are attributes and whatever else you can bring in on board, but it's not going to happen overnight. So just take that on board, guys. Here you go. We've hit take profit on this one, and I really hope you've enjoyed this trade. For now, take care and catch you next time. Bye-bye.